Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 9th of January 2022, about 5:45, where I am at the moment, and about 15 hours until market open. So yeah, it is Sunday today, and as usual I'll be analysing our major currency pairs, be looking at gold and global equities. But firstly, we'll be looking at what macroeconomic data is going to be released, along with any central bank members' speeches, and analyse our charts and map out potential trade ideas with the technical and fundamental confirmed. So firstly, we'll go on to the US. So with the US this week, very quiet day on Tuesday. On Wednesday, just be very cautious. Just be very cautious early on. Please do not get clapped by Jay Powell's comments when he does testify. But on a serious note, he's just more than likely, when he does testify midweek, he'll just be clarifying from what the central bank members talked about last week in regards to the tapering process and the rate hike process. So just to quickly summarize, they are anticipating 2 to 3 rate hikes this year and ending the bond buying program by the end of Q1. So what does that mean on the chart? So it pretty much means it's good for the dollar. Okay, it's good for the dollar, bad for equities. It's very bad for companies and businesses that have a lot of debt. Like, more than likely those companies are going to get wiped out unless they can get a bailout from the government, which they most likely will. But yeah, that is very optimistic and encourages a more risk-off sentiment. Okay, so there's going to be a lot more money pulled into the dollar, as we can clearly see that on the chart as well. And we know when it comes to the equity market as well, over the past week, we've seen a lot more inflows into more of the financial sector, because as we do know, the financial sector, with the rate hikes, obviously there's going to be less demand for loans and borrowing, but with the increased rates, that's going to offset the weaker demand. So that's good for the financial part. So, very bad for our tech stocks, and actually very bad for gold as well, as we trade gold against the US dollar. And obviously, if the dollar is a more favorable investment, they're gonna start pulling money more into the dollar, and focusing more of those safer assets. Okay, and that's why we've seen the treasury yields spike up recently. So other than that, later on Wednesday we do have inflation numbers coming out. So yeah, that'll be very important. So hopefully we can actually get a lower number, and try and avoid these inflationary pressures. But with the supply chain issues that we're seeing around the globe at the moment, I don't think we're going to see like a sudden drop in inflation based on the other macroeconomic data from last month. So yeah, I mean, everything is starting to ease, but it's all slowly, it's all very slowly. So yeah, just keep in mind of the inflation numbers. Obviously, if we do see some high inflation numbers, we're going to see a lot more money pulled into gold. I know I did just say the opposite a second ago, but in the long run, like when you're speaking long term, because ideally the high inflation periods, they're most likely going to be over for this year. Like we're not going to get an inflation 5% year over year for this year. In the short term, we could see inflation spike up month over month, but on a long term basis, no. So on the long term, a more favorable investment would be to put more money into the dollar, especially with the Federal Reserve's tone of hiking rates and so forth. So yeah, just inflation numbers on Wednesday, and on Thursday we do have jobless claims and PPI numbers, so inflation on the producer side. And on Friday we do have retail sales numbers being released, along with the central bank member Brainard speaking to start the day. Okay, and then later in the session we do have the Michigan Consumer Sentiment Index. Okay, so with the UK, we do have like-for-like retail sales on Tuesday, and to end the week we do have GDP and trade balance numbers, which actually falls in line with the industrial and manufacturing production numbers as well. So yeah, just being very cautious of that. And considering that the UK didn't have any restrictions due to the COVID strain, I believe they did have some restrictions, but a lot less compared to the European Union. So I'm not really expecting a contractionary result when it comes to GDP. Like I'm not really expecting us to hit 0.1% as previous. I'm really expecting everything to be status quo, or slightly to the bullish side. So moving on to Europe, we do have unemployment rate coming out on Monday, and we do have industrial production numbers coming out on Wednesday, and on Thursday we do have the economic bulletin and trade balance numbers on Friday. Japan, we do have public holiday on Monday. Moving on, we do have current account on Wednesday, and yeah, nothing too much. Nothing being released in Canada this week, so no economic data. We do have TD Securities inflation on Monday, which is kind of strange because when TD Securities inflation numbers get released, usually the RBA has their meeting. So yeah, it's, probably just because it's the start of the year. So moving on, we do have building permits later on in the day, and on Tuesday we do have trade balance and retail sales, and on Wednesday we do have new home sales, and on Thursday we have consumer inflation expectations. Okay, so firstly we're just going to start off with the euro. Okay, so with the euro, we're always on the 4 hour, analyzing the chart on the high time frame. So on the 4 hour, the euro has been rangy, especially at these lows here, roughly, we've just been stuck in this consolidation range. But if you really do take notice, we are in a bit of a high time frame bullish structure. It's just very steady. So to me, with the US dollar gaining a lot more traction based on the Federal Reserve's tone, I'm really expecting us just to, we're just starting to exhaust. Like we're starting to break to the upside here, but we are just really starting to exhaust. Obviously, there's a lot less liquidity throughout the December month, but to me, I'm still bearish on the euro. I have no reason to start buying the euro. Obviously, we might get like a nice little breakout here and start to push to the upside to the next high time frame key level. But to me, I'm overall bearish. But to me, safer sells, obviously you want to break below 1.12 flat, or we can take some high risk sells. Okay, high risk sells, and we can start to clear these lows here, because I'm still very bearish. Like based on the Federal Reserve's tone, obviously we could get like a nice little spike up here, but overall I'm very bearish. Okay, I'm very bearish on the euro. So ideally that is what I'm seeing on the docket here. So if we retest, roughly these previous highs here, we could even retest this high here, and then we can grab liquidity here at 1.13800, push further down, close below here at this price point at 1.12800, so roughly like a little 100 pip range between here, and we can see the euro start to fall to the downside. So that's what I'm seeing at the moment for the euro. So moving on to GU has been steadily climbing to the upside. Obviously the moves here have been actually less impulsive. It's actually been a lot more choppy, and obviously that's due to the less liquidity and less volume right now. So ideally what I do want to see, I'm really looking at this little price point here. Okay, really looking at this previous low here and then this previous high. Once we did actually fail to close back and snap back into this range, we did actually start to fall to the downside. But to me, the sterling is a lot more bullish compared to the euro, as the Bank of England have already hiked their rates last month. So if we do see some good numbers, we could see a spike up here. But to me, I'm just following the momentum right now, and I don't really have enough reasoning. Obviously with the US dollar, there's a lot more bulls, and there's a lot more favorable opportunities to start going long on the dollar. But in the short term, and still following the momentum at the moment, I'm really happy to if we can break and retest above 136 flat, so psychological price level, we can start to retest and come to the upside, and I'll be looking roughly at these previous highs here, so that'll give us like a little nice 90 pip range to the upside. But to me, once we start to close above there, we can start to go for those longs. So that's what I'm seeing at the moment. Like I said, I don't really have any reason to start selling and start going against the momentum. Obviously, I am more bullish on the dollar, but in the short term, we can still take advantage of some buys. But I will only be taking the buys if we break above here, okay? Because that's just going to show me a lot of buy side liquidity. But in the near term, if we fail to close and generate a bit of a nice counterbody resistance here and fail to close above, yeah, we can take some high risk, high reward sellers. Obviously, very high risk. Not really. I mean, they're not really going to be your safer trades, but you can take some high risk shorts here. And then you can start to, if we start to close, let me do that one. If we start to close, like honestly, if we start to close roughly here, yeah, if we start to close roughly here, we can potentially fall to the downside. Okay, we can eventually fall to the downside, and seeing a lot more outflows from the pound and a lot more inflows to our safe haven assets, mainly the dollar itself. So that's what I'm seeing at the moment with GU. GJ will be actually very similar. I'm looking for the same thing here, but GJ is actually looking a lot more. It's looking a lot more clear. That we're actually exhausting at these highs here. So just let me zoom out a bit. I was really expecting GJ to come up to 158, but we actually did come to 157.750 roughly. But to me, it's looking like we're starting to exhaust. There's been a lot more inflows into the Japanese yen, but really seeing this here. So that's our high here, and what I'm really seeing, I'm just seeing us just play in this little range. And obviously, once we start to break and retest here, I'll probably be looking for this little price point. So we can take the shorts from 500 to 750. So that's roughly going to give you like a little 75 pip range. Okay, and then we can go down the levels and target these specific price points. Okay, so yeah, we can eventually start to target down here and then come to the downside. So that's what I'm seeing at the moment with GJ. Like GJ's looking like it's starting to exhaust, and we can actually see with the Japanese yen, we did actually get a nice bounce back off the 86 low here, and now I really want to see how we're going to react at 86.68. So yeah, GJ is looking like we are starting to exhaust, but if I'm taking buys, I'm really just going to wait for us to break above here. So break above 157 700. So I'm seeing Usdcad on the fall to the downside here, but as I was saying, I'm very bullish on the dollar. To me, this is just a bit of a pullback structure, and we've just seen as well, you know, oil is back to nearly $80 a barrel. So if we do see oil continue to appreciate, we can obviously see a lot more inflows into the Canadian dollar. So that being said, I'm really looking at these lows here. Like, to me, this is like a potential make or break level. If we actually do break below here, then we're starting this bearish higher time frame corrective structure. But obviously, to me, we can get some high risk, high reward buys here, and then potentially target, you know, these previous lows here, this low here, and then these highs here. So yeah, that's what I'm saying. You know, we can start to target 127.500, and that'll, and we're and if we do come down to this low, that's about 250. So that is like 140 pip range. So yeah, that's like 140 pip range. So yeah, we can definitely start to target that with Usdcad for some high risk, high reward buys. We're only going to see that if Jerome Powell he actually reiterates, and we do have, so if we have good inflation and Jerome Powell actually states about reducing the balance sheet, confirming about the rate hikes, and confirming that the bond buying program is going to end very shortly, within the next few months, yeah, then dollar bulls are back on the table. Like, they're going to be very evident. So yeah, that's what I'm seeing at the moment with Usdcad. Okay, obviously once you start to close, yeah, when you close below here, yeah, you can definitely adapt to some further sells and potentially target this little price level here on the higher time frame. Okay, because yeah, that level will be too short. I mean, obviously we can get in like a little quick scalp and get a nice little squeeze here to this downside move here, and targeting these previous lows and these previous highs. So that's what I'd be seeing at the moment with USDCAD. Dollar, yeah, dollar, we're just starting to pull back a bit here. So to me, if we actually start to close, you know, below this little price point, yeah, we can definitely see dollar just come further to the downside. But overall, like, I am still bullish, and we could get some high risk, high reward buys on dollar here, and especially once we start to retest a higher time frame key level at 95,900, we can start to continue back to the upside. So that's what I'm seeing on gold at the moment. Obviously on the higher time frame, yeah, on the higher time frame, we are actually, you know, pretty choppy. So for roughly a month, you know, we've just been stuck in this higher time frame range from near, like, pretty close to 97, so 96,900 to 95,550. So to me, obviously it's going to be a lot safer for buys once we actually, so if we can snap back into this range, that's your medium risk buys, and your high risk buys at 95,550, and safer buys once we start to break above here. And that's only going to happen if the Federal Reserve is actually stating, you know, shrinking the balance sheet, accelerating the tapering process, and ending the bond buying overall, and confirming the rate hikes. So yeah, and moving on to Japanese yen, obviously we've had a bit of a bounce here at 86.10, and now I just want to see how we react at 86.65. I do want to see if we can potentially snap back into this range, and that will be very evident for GJ shorts. Okay, so if that does happen, where, like, if we do snap back into this range, retest the low, and start to push further up, we can definitely start to short GJ on the higher time frame. Okay, but I mean, obviously Japanese yen is very bearish, but to me, if we snap back into this range, we can start to take advantage of some GJ shorts. Okay, however, if we do see Japanese yen start to break below here, start to break below 86, yeah, Japanese yen is just going to fall further to the downside. Alright, moving on to gold. So gold has been falling to the downside here. So yeah, gold has been a bit messy, so yeah, roughly just looking at these previous lows here, and these highs here, and fundamentally, if we do see the Federal Reserve start to shrink the balance sheet overall and have a more hawkish stance towards the US economy, we can start to sell gold. Okay, to me, after having these crazy impulsive moves to the down, they're not crazy, but after having these strong impulsive moves to the downside here, it's showing me that sellers are really in control. Okay, because, like, realistically, look, you got these impulsive moves here, you got these impulsive moves here, then we start to consolidate, accumulate a bit, then you have these massive, like, quick downside moves here. Okay, like, we have this strong impulsive move to the upside, and it's just very slow. It's just very, very slow, and then you get a strong push to the downside. Like, for instance here, like, honestly, if we count the candles here, when we break out 1, 2, 3, 4, 5, 6, 7, 6 candles, okay, and then for us to go back to this range, it takes a few candles. Okay, it takes a very few candles. Okay, and especially with here, right, look at that sell side liquidity. Like, the fact that price pushed back to this previous level and closed way below is showing that there's a lot more, like, it's just saying that the sellers are in control. So pretty much, to me, your safer trade is once we break and retest below, what's that, 1790, yeah, 17. Once you start to break in retest below 1789, and following the Federal Reserve's tone, we can start to short gold and go for some. We can potentially go for some nice swing trades here once we start to break below here, because there is a lot of sell side liquidity just lying below here. So I'm just being very cautious of that. Obviously, we can generate a bit of a nice candle body support, but just based on the volume and the liquidity, like it's really looking like the sellers are in control. And once you get that impulsive break below here, we're just going to push to the downside. So to me, I'm more in favor for some gold shorts. Okay. Next thing is US30. So US30, to me, US30 is just going to have a bit of a higher time frame consolidation, especially with these Federal Reserve, rumors, about shrinking the balance sheet and being a lot more hawkish towards the US economy, which is bad for equities, okay, especially with your growth in tech companies. But with the Dow Jones, it does have a lot of financial companies in there, a lot of big blue chip companies. So we're not going to see a massive, like a massive correction. Like you're going to see a massive correction with NAS. Like if we compare Nasdaq to Dow Jones, like there's a big difference. Like there's a huge difference, and mainly like the main reason behind that is due to most tech companies, they have to borrow money, to expand. Obviously, they're called growth companies for a reason, so they rise exponentially compared to like a bunch of boomer companies, bunch of, just a bunch of like blue chip, growth companies, okay, or value companies, okay. So yeah, just being very cautious of that. But when looking at the Dow Jones, we're probably just gonna consolidate on the higher time frame based off the Fed's rumors and the Fed sentiment. So it's been very cautious of that. So what I'd like to see is if we can actually start to break below this little price point here, we can start to aim for some shorts, and potentially I really want to see if let me fix this up. Yeah, I want to see if we can get a bit of a liquidity grab to potentially 36,130, and we could we can potentially take some high risk, high reward buys, based on the seller's momentum here. We can potentially take some high risk, high reward buys, retest. I believe that's just 36,900, and we can take these buys to the upside here. But to me, in a higher time frame, and with the Fed sentiment, yeah, we're probably just going to have a bit of a pullback structure. But to me, once you start to close below here, we can start to aim for some sells. Like to me, based on the momentum, I'm probably looking for some further sells in the short term. But I know overall we will eventually push to the upside. But we can potentially come down here, then eventually push further to the upside, or we can dig at this previous low here and then can continue back up. But more than likely, if we do a bit of a pullback, I reckon we'll just start to reject at 35,500 price level.